Zuber and Company, fire forensic experts and forensic engineers. Seeking answers from ashes. Seeking answers.
Welcome to our explainer. Today, we're diving into a legal case that has a twist so good, you'd think it came straight out of a movie. I mean, that sounds completely backward, right? How is that even possible? Well, a crazy dispute between a cement company and its insurance provider shows us how winning on a technicality on a matter of procedure can be just as big a deal as winning the whole case. So let's get into it. Okay, so let's set the scene. The date is May 3rd, 2012. There's this massive explosion at the KJS cement plant, and it just rips through a really important piece of equipment. Now, they thought, no problem, because they had this huge insurance policy covering the plant while it was being built and tested. So naturally, they filed a claim. But the insurance company came back with a big fat nope. Claim denied. And this right here, this is the letter that kicked the whole thing off. This is the official denial, the repudiation from the insurance company. And their whole argument was basically, hey, that machine was already up and running making stuff, so it wasn't covered by the construction policy anymore. This letter started a legal battle that went on for years, but it turned out the fight wasn't really about the money. No, the real drama, the heart of this whole thing, wasn't about the explosion at all. It was about one single document. A secret report that the insurance company absolutely refused to let anyone see. I mean, put yourself in their shoes. If your insurance claim got shot down, the very first thing you'd want to know is why, right? You'd want to see the proof, the logic, the evidence they used against you. And for them, all of that was locked away in this one report. And that document is called a surveyor's report. See, after something like an explosion happens, the insurance company sends in an independent expert, a surveyor, to figure out what happened, how bad the damage is, and whether the policy even applies. That report, it's literally the foundation for the insurer's entire decision. So for KJS Cement, getting their hands on it was everything. It was the only way they could even begin to fight back. So KJS Cement does the obvious thing. They send a formal request. Hey, can we please get a copy of that report? Seems pretty simple, doesn't it? It's a key piece of evidence that's all about them. So what do you think the insurance company did? They said no, flat out. Can you believe it? The company that based a multi-million-dollar decision on this one document wouldn't even let the people they denied see it? And right there, that refusal changed the entire game. This wasn't just about an insurance claim anymore. It was about whether the process itself was even fair. Now, this is where the story gets really interesting. The insurance company didn't just say no once. Oh no, they said no a couple of times. And you know what? Their reasons for saying no kept changing. KJS Cement was trying to use India's Right to Information Act, or RTI, which is supposed to make things more transparent. But the insurer just sent back these two refusal letters, one in April, and then just 3 months later, another one in July. And just get a load of this. This is where it gets wild. In the first letter, they say, sorry, the RTI Act only applies to a citizen, and you, KJS Cement, are a company, so you don't count. Okay. But then, in the second letter, they completely change their story. They say, well, the request came from an individual, not the company, so that makes the report third-party information, and we can't share that. So wait a minute, which one is it? Is the problem that it's a company or that it's a person? It's like they were just throwing excuses at the wall to see what would stick, all to hide the same document. This, right here, was KJS Cement's new argument. They said, look, this isn't just unfair, it's a violation of the rules. They claimed the insurance company was deliberately hiding the very basis of its decision, which goes against regulations that demand transparency. The fight had officially become a matter of principle. So after years of back and forth, the case finally goes to a major consumer court. And they come back with a two-part decision that pretty much nobody saw coming. First up, let's talk about the original issue, that huge insurance claim for the blown-up equipment. The court looked at all the evidence, heard all the arguments, and then they made their decision. And KJS Cement lost. The court actually agreed with the insurance company. The evidence was clear. The equipment had been running nonstop for nearly 3 months. It had produced 120,000 metric tons of material. So yeah, it wasn't under construction anymore. The policy didn't apply. A total loss. You think that's the end of the story, right? Wrong. Because that wasn't the end of it at all. The court then turned to that other issue, the insurance company's refusal to share the surveyor's report. And on that point, wow, did the tone change fast. And just listen to the words the court used. They did not mince words. They called the insurer's refusal to hand over the report and all their flimsy, contradictory excuses a totally incorrect stand. That's strong language coming from a court. In legal terms, they called this behavior a deficiency. And what that basically means in consumer law is that you failed to provide the service you're supposed to. The insurance company had a duty to be fair and transparent with their client, and it didn't matter what they thought of the claim, they had failed that duty. And that failure came with a price tag. Even though the insurance company won the big money case and dodged a massive payout, the court still hit them with a penalty of 1 lakh rupees. That's 100,000 rupees for one thing and one thing only, their lack of transparency. They won the war, but they definitely lost this battle. So what's the big deal? Why does this one procedural point matter so much? Well, because this verdict set a really powerful example about fairness, and it points to a much bigger idea. What the court really did here was reinforce some huge ideas about the relationship between you, the customer, and a big company. It says you have a right to know why you're being denied something. It says that crucial documents, the ones they base their decisions on, have to be shared. And hiding that information, that's not just shady, it can actually get you punished. It proves that how a company does something can be just as important as what it does. And that's the real lesson here. Just because your claim might not be valid, that doesn't give a company a free pass to be sneaky or unfair. The process matters. They have a fundamental duty to be transparent with you, their customer, period. And that leaves us with one last thing to think about. In the end, KJS Cement never got a dime for that broken machine, but they did win a huge victory for the principle of transparency. It really makes you wonder, doesn't it? In the fight to be treated fairly, is the right to see the information sometimes a bigger win than what's actually in it?